Hello and welcome to Treasury Notes, a financial education program from the Office of West Virginia State Treasurer John Perdue. I'm your host, Gina Joins. Every child in West Virginia deserves a chance to go to college, but for children who spend the early years of their life in the foster care system, that dream may seem impossible. We're trying to change that. Coming up on today's show, we'll tell you how money raised during the SMART 5.29K Run Walk will establish college savings plans for children adopted from West Virginia's foster care system. We'll talk with Rachel Kinder from Mission, West Virginia about how this effort will make a difference for some children. But first, we're going to talk about some simple ways you can help yourself financially. When it comes to personal finances, your credit may have a big impact on your financial well-being. Just like we grow our savings, we can also grow our credit. But first, we have to know how our credit works and why we need it. Joining us today to talk more about the value of credit scores is Angela Roach, Director of Consumer Credit Counseling Services of Huntington. Angela, we appreciate you being here with us today, and this is a great topic for our show to discuss just how people can learn a little bit more about their credit scores. And before we go into the details about credit scores, why don't you just start by telling us more about your work for Consumer Credit Counseling Services, and that is also a division of Goodwill Industries, correct?
Yes, it is.
Okay, so tell us a little bit more about the work you do there.
At Consumer Credit Counseling Service, we help people, our focus is to help people get out of debt, stay out of debt, and just kind of look at their financial life in a different way. We help people with their debt on a debt management program. What that does is the creditors work with us, they lower the interest rate, the clients would then make a fixed payment to us once a month. We pay the creditors once a month with that money. The goal is to have them out of debt in 3 to 5 years versus 30 years making a minimum payment at high interest rates.
So you work to get people who maybe made some poor decisions in the past, you work to get them back on the right path,
yes,
correct?
Yes.
And this is a service, is this a service anyone can take advantage of? Do you have to qualify? How does it work?
Absolutely. We have had doctors, lawyers, anybody can be on the program. There's no income guidelines, excuse me, there's no income guidelines. It's all relevant to what you make, to what you spend.
Oh, that's a great point. I mean, it doesn't matter what you make per se as to whether or not you may find yourself in some type of financial turmoil.
Right. We see people in all kinds of different situations. I mean, some people are self-professed shopaholics, you know, they get their self and they realize it, or some of it's medical debt. Some of it, you know, they've lost a job, they've had to use credit cards to live on. I mean, you do what you have to do. So a lot of people find themselves in a situation not by their own fault.
Do you find that a lot of times that it's not always the people who say they're struggling financially because of what they make, it's how they spend it?
Yes, yes. Most people don't understand. They don't even know how much money they have going out every month.
It's, you know, it's surprising to some people, but really to others it might not be that surprising because, of course, here in the State Treasurer's Office, we're always trying to do financial education, and that's a big part of it, is knowing what's coming in versus what's going out. You offer assistance with several different types of financial matters, but today we wanted to talk a little bit specifically about credit scores. Mm-hmm. And let's just start with the basics when you're talking about credit scores. What is a credit score? How does it work?
A credit score is like a snapshot of how you manage your finances, your credit life. You know, lenders look at it, your automobile insurance will look at it, your landlords will look at it. It's very important. It's very important. And a lot of times people don't pay attention to it until they need it. And then they discover that it's bad. And then they call us and say, how do I fix it? And they want a quick fix, and there is no quick fix.
Well, you say it is very important, but some people think it's just a number. Why is it important? Can you give us the answer as to why?
If you have low interest or a low credit score, you're going to have a harder time getting loans. And if you do get them, you're going to get high interest rate loans. I mean, you know, if you have a credit score in the 500 range, and you need a car, you might end up paying 15% interest. Whereas if you have a score of 650, 750, or 800, you might get a car for 5%, 6%.
Wow.
It's a huge difference in the payment.
Yeah, and Angela, you talked about, of course, when you go to get a loan, maybe to buy a car, other businesses, they can look at our credit scores. How can we ourselves look at our credit scores and find out really where we stand?
Well, in 2009, there were a lot of laws that changed regarding credit, and one of the things that became available was a free credit report once a year, and you can pull that through annualcreditreport.com. There is a toll-free number, and then you can write in to get it as well, but most people go online to do it. The score is not included for free. They will charge you for the score, but you can get 3 copies, the 3 bureaus, Equifax, TransUnion, and Experian. You can get all 3 copies for free once a year. We encourage people to do that so that they can see. It's a great way to check for identity theft as well. Or you can just go straight to the credit bureaus and order one. You'll pay for it. And we pull them in our office as well. And we pull a tri-merge report. It includes the score, and one of our counselors or myself will sit down and go over it, explain it to you, how to read it, what it means, and how to correct errors, things like that.
So is there more than one credit score?
Yes, there are 3.
Explain the differences.
It's really difficult to explain the differences. They should, if all 3 credit reports match, which a lot of them have mistakes.
Right.
You may have 2 perfect ones and one's chock full of mistakes. Those scores, if they all match, the scores should be very, very close. But each credit bureau has their own criteria that they score on, so that's why you get a different score. Sometimes lenders may pull all 3 and take an average of those scores,
Okay.
or they may look at the 2 best scores.
Well,
It
let's
just
talk
depends.
about how this score is created. Can you tell us how this number usually comes about?
Yes, and a lot of people are surprised by some of the percentages of what their score is based on, but 35% of your score is based on your payment history, good or bad. So 35%, that's a huge thing. So paying your bills on time every month is the most important thing. 30% of your score, which is the next biggest chunk, is based on how much of your credit line you're actually using and carrying a balance on. Rule of thumb is no more than 40%. I've even seen lower. So on a $1,000 limit, don't go above $400 on your balance. The closer you get to that limit, your score starts dropping, even if you've made every payment on time.
So are there other things that can have a negative impact on your credit score?
Late payments, if you go 30 days delinquent, which basically means you're going into missing a second payment, stays on your credit report for 7 years.
Wow. So it takes time
It does
to
take
get
time.
that credit score corrected. What has a positive impact on your credit score? Let's talk about that.
Paying on time, that's the best thing. Keeping your balances low.
Okay.
Not opening a lot of credit. A lot of people
So you
will go
don't want
credit.
these large lines of credit available to you. That doesn't
Yeah.
help like you think, oh, they gave me a $100,000 credit line. That's great.
That's kind of a gray area because nobody needs that much, really.
No one.
It's dangerous.
$10,000
It's tempting,
is like
it's dangerous.
way too
Yeah.
much. I say, give me 1,000 maybe
Right.
if that.
Right.
I don't want to
Because
spend more than I have.
Well, you can look at it as potential debt. I mean,
Yeah.
a lender can look at that and say, oh, they're not carrying any debt, but, we all could have a bad day and go shopping, and run it up. I mean, so
it
it's
is
potential.
looked at as potential debt.
It can
That's a
be,
great-
yes.
great
It's not
point.
a huge factor, but it is part of what it makes up your score.
Okay, is there anything that does not have an impact on your credit score that we need to talk about?
Yeah, there's some, your income is not listed on your credit report. The only personal information on your credit report is your name, your address, your employer, and your credit, your social security number, those things, but your income is not included on there. So that has nothing, there's no factors for your score.
Okay, people who have been keeping track of their credit score, there is still some recent changes to be aware of for those people. One of those changes is the FICO credit scoring method. Tell us a little bit about what changed.
One of the big things is medical debt. There's going to be a 180-day waiting period before it shows up on your credit report because so many people say if you've been in an accident and insurance needs to pay, or even if you've had surgery and your insurance is slow paying, you may not need to pay that bill, but you're letting it ride. A lot of times it would show up on your credit report as a collection item. So now there's going to be a 180-day waiting period before those actually show up to give time for the insurance to pay.
And there was also a change when it comes to consumer access to credit scores. This change hopefully will make the credit scores more accessible to people. Is that correct?
Yes. I know just 20 years ago, you didn't have access to your credit. You'd
No.
go into a bank and ask for a loan, and they'd look at it and say, no. And you'd say, why? Can't tell you. But now you can. And annualcreditreport.com is one of those websites that you can get it for free. You can come into our agency and get it. We do charge for it, but you do get a counseling session. So now it is very accessible. It is. I mean, it's just a lot of people don't want to look at it. I think a lot of people are afraid of their credit score. We've offered free ones as giveaways sometimes, drawings, and they're like, no, I don't want to know. So a lot of people do shy away from it, but they really, really need to look at it.
And like we were talking about earlier, everyone really needs to look at this. It doesn't matter what your income level is.
Right.
You really should be looking at your credit score. Now, your office works through Goodwill, so does the change regarding reports obtained from nonprofit counselors apply to your organization as well?
No, we've always offered credit reports at our office. I've been there 13 years, and anybody can walk in off the street and ask for their credit report. We pull it, we'll sit down and look at it with them, give them information. If there's mistakes or errors, we can tell them how to write a letter to dispute that. So we've always offered it.
Now, if people go to these websites and try to find their credit score themselves, will they have some barometer to check what constitutes as a good score? I mean, what's a good number? What's a bad number?
It depends on what type of loan and because different lenders look at different criteria.
Mm-hmm.
I personally know someone who went for a car loan and didn't have such great credit, but then they were turned down, but then they went to another bank and they said, well, you've been employed for 20 years. You've never made your mortgage payment late. Here you go. We're going to give you a loan. So it varies.
It's subjective.
It is very subjective. It's
Okay.
very subjective.
Okay. Before we let you go, I just do want to ask again, so what can consumers actively do to improve their credit score and try to make this something that they're on track with?
The first thing is check it once a year.
Mm-hmm.
If you see any errors, get that taken care of as quickly as possible. If you're going to go make a major purchase like a home or a car, pull your credit report 30 days ahead of time. That way, if there are errors, you have 30 days. That's the time frame for corrections. So you want to take care of that first. But make your payments on time. If you don't have credit, a lot of people say, I don't want a credit card. Try to build it somehow. A credit card is the easiest way. It can be your best friend or your worst nightmare. It just depends on how you deal with it.
Yeah.
But, making your payments on time, don't run up your bills, don't max out your cards. Those are the basics.
And you want to know your credit score. Knowing is half the battle.
Yes.
Angela,
yes.
Thank you so much for sitting down to talk with us today. Really quickly before we leave, is there a place where people can go for more information on your services?
Our website is www.goodwillhunting.org. We are located in Huntington, West Virginia, but we can talk to you over the phone from anywhere. We take phone calls all the time, and we'll be more than happy to make it the most convenient for you.
All right. Thank you so much for joining us here
me.
today. Some great information. We're going to take a quick break right now. Coming up next, how the Treasurer's Office joined forces with a local child advocacy group to turn dreams of college into reality. Stay with us. Welcome back to Treasury Notes. I'm your host, Gina Joins. For more than a decade, the Smart 529 College Savings Plan has helped thousands of families take practical steps to save for higher education. But for some West Virginia children, their dream isn't just about going to college. Their dream is about having a family to call their own. For thousands of children in foster care, a college education can sometimes seem out of reach. Today, we are joined by Rachel Kinder from Mission, West Virginia, to talk more about what's being done to change all that. And Rachel, we appreciate you being here with us today. Let's start by just, if you could, give us an overview of Mission, West Virginia and what you do.
Sure. We're a private nonprofit, and we were founded in 1997 by the late Governor Underwood. And we have three main programs. One is technology related, that's eImpact. Another one is called Think, and that is teen pregnancy prevention and healthy relationship classes. And then the third is Frameworks, and that's the program I work for, and that is foster care, adoption, and kinship care related services.
Talk a little bit more about Frameworks and really what your mission is and what you try to do as an organization.
Sure. We really have three main goals. We work to spread the word that there is a huge need in West Virginia for foster and adoptive families. So we put a lot of PR out there related to that, and then families, we have an 800 number. Families can call us, and then we guide them through the process of getting certified as a foster or adoptive family. We also work with children who are adoption eligible and who have unfortunately been waiting longer amounts of time in the system, so we help to match them with adoptive families. And then we also work with Relatives as Parents program, and that is people engaged in kinship care. A lot of times it's grandparents raising grandchildren in situations like that. We can provide some assistance to those families.
Yeah, we see that a lot, but just to give some people some perspective, tell us more a little bit about the foster care program. There are thousands of kids in this program right now, right here in West Virginia, and many people don't know that.
There are usually over 4,000 kids in foster care in West Virginia, and usually about 1,000 of those children at any given time are considered adoption eligible.
Wow. Okay, so explain how Frameworks and your organization assists with the foster care system and what role Frameworks really plays.
We really are trying to get families certified. We're trying to make them aware of the need, because the need is just increasing every day, and then we help them through the process, because it can be intimidating. You have to find an agency. It can be your county DHHR, or there are 10 private agencies in the state, and they have to get in touch with them. They have to go through training classes, and they go through a home study, and it can be intimidating. It can be hard to get in touch with people. A lot of people have very basic questions. You know, can I be single? Do I have to own my own home? Yeah. And we try to, clear up misconceptions and just make the process smoother so that we can get families certified quicker.
This can be a scary process for these families. I mean, I know obviously it's emotional for the children, but for the families considering being a foster parent, it can be a stressful process too.
It's involved, it is, and the reason is there are safeguards in place to make sure that the children are placed with safe families, but it can be a lengthy process, and people just have there are a lot of misconceptions, and people just need to know that the average family can be certified as a foster adoptive parent, and that we really need them to be.
Well, so what's your pitch? I mean, why is it important that there are families who step up to the plate and say, okay, I'm willing to do this because there's such a need?
There are not enough families in West Virginia. With the drug problems in West Virginia, they're just taking custody of more kids, and there aren't enough homes, there aren't enough beds for the kids coming into care, and there's always a need. People ask sometimes, do you need foster parents? And it's like always. There's never a time that we don't need foster parents.
It can sometimes be a sad situation, but sometimes it can be a really happy situation, and you guys help out with the adoption process as well. Talk about your role in that process.
We work with specific kids, and their DHHR worker would refer them to us, and these are kids whose their parents have already gone through the court system, their rights have been terminated, so these kids are legally eligible to be adopted, but for some reason they have not been matched with the right family. So we have a program called the Wendy's Wonderful Kids program, which is through the Dave Thomas Foundation, which is a national program, and we pair a worker with these specific kids, and the worker has a small caseload, so they get to build a good relationship, get to know the kids, prepare them for adoption, and then help them find the right family that would be the best fit for that child. So even though it's really hard work and these are challenging kids, it's really rewarding when you see that come together.
Absolutely. And you mentioned earlier there are thousands of kids here in West Virginia in the foster care system, but not all the kids are waiting to be adopted. Is that correct?
Right.
Explain that.
Because legally, first we try to reunify them with their birth families, and they work a plan through the court system, and we try to get the family help and fix the issues that brought the kids into care. And ideally we can reunite that family, but if we can't, then that child needs to find an adoptive family, as quickly as we can do that.
We have a national statistic here that shows only about 3% of kids who grow up in the foster care system end up going on to obtain a college degree. That's a really low percentage. Why do you think that percentage is so low? And that's part of going to be a little bit more of our discussion later on about how we can change that.
There are several risk factors. When children are with their biological families, they often don't get the early intervention that they need. They might have a lot of school absences, so they already start off behind. And then when they enter foster care, I think I saw a national statistic that between 50 and 75% of kids, when they enter foster care, they change schools. And another national statistic is that by the time they're 17 or 18, they've had 5 or more school changes.
Wow, that's a lot.
It's a lot. They get behind academically. They're not able to form those relationships with their teachers and their peers that would, enhance their academic performance. And these are kids that have been through trauma, and that can influence behaviors, and these are behaviors that can make it hard to achieve in school.
Those statistics now, they do improve for children who are lucky enough to be adopted, but even then it's not always an easy road. Tell us some of the hurdles that those children still face even after they've been adopted.
Sure. Definitely they're more likely to go to college once they have an adoptive family to guide them. And there are measures in place to help. The older the child is, the more assistance there is. So if a child is adopted at age 13 or older, they can be considered financially independent when it comes to financial aid eligibility. And then when they're adopted at age 16 or older, they can be eligible for tuition waivers. But for kids adopted 12 or younger, they don't access those services. They're not eligible for those. And at the same time, their parents have missed 12 years worth of college savings for these kids.
Right. That's a lot. Well, that's why the Treasurer's Office did partner with Mission West Virginia to help change some of those statistics. We recently held the first Smart 5.29K run walk to benefit Mission West Virginia. All proceeds from the race are being deposited into Smart 529 savings accounts and will be awarded to children adopted from the foster care system right here in West Virginia. For our first event, it was a huge success, both in proceeds and in raising awareness for this important issue.
Past doesn't define the future, and I think we believe back to make sure for every child that has been or will be in the foster care system.
The future of this state is about kids and what's going to happen in the state of West Virginia. And we're the people, the leaders, that's got to make that difference and make our state what it needs to be in the future.
3, 2, 1.
More than 50 people registered for the inaugural Smart 5.29K Run Walk in downtown Charleston. Registration fees, along with some generous donations and sponsorships, brought in more than $8,000 for the cause. The proceeds will be used to establish Smart 529 savings accounts that will be awarded to children adopted from the foster care system here in the state. The awards will be determined from an application process administered by Mission West Virginia. And it really was a great event. Rachel, I was there, you were there. We had a lot of fun that morning, and I think people really enjoyed it. And we also heard from a parent who just newly adopted a child out of the foster care system, and really a touching story there, talking about how she feels that raising money for this cause will go a long way to help these families and to help these kids eventually see that they can go to college. So talk about, from your perspective, what you think this partnership will help achieve.
We are really excited about this because we are trying to branch into some educational services. From our experience working with foster and adoptive parents, that's the #1 issue that they have, is they want help with the education system. And the adoptive mom that spoke, she did a great job, and when her son was adopted at his adoption party, they asked for contributions to his college savings account. So it was obviously important to their family. And there's a lot of adoptive families that we think would want to start college savings plans and maybe just haven't taken the initiative to do it, or just maybe don't know where to start. So we're going to help spread the word.
Well, and if you think about it, these families, if they were foster parents, there are expenses associated with that. Adoption process, there are expenses associated with that. And you made a great point earlier that said if they adopt children who are maybe a few years older than just recently born, they've already missed out on a few years of saving for college expenses. So there are a lot of reasons why this partnership is really headed in the right direction. And talking about the direction we're going in, let's talk about what happens next. There's an application process that these families can go through now to be considered for these new scholarships. Explain to us how this is going to work.
Well, we have the funds. That's the hard part.
Yeah.
So next, we're in the process of developing an application, and it's going to be a very basic application with easy eligibility. The child needs to have been adopted from the West Virginia foster care system and be age 12 or younger at the time of application.
Okay. And the hope is that these Smart 529 accounts will be awarded later this year.
Right. Right. And I think, once the families are selected, it's my understanding you're going to give them some education on college savings and, do some awards for the kids and just make it a special occasion for them.
Yeah, absolutely. One of the board members, Jamie Dickinson, who has a planning service for these students as they prepare to go to college. She's donated her time and services, so that's very exciting as well, because they're also going to get some guidance to go along with the money that they receive. And this is something that we hope we can continue to grow, correct?
Correct. Their initial investment will grow, and the great thing about adopting from foster care is that those families are eligible for a monthly stipend until the child is 18 or older. And a lot of parents, when they're financially able, they want to direct that into a college savings plan. If they don't need it monthly, they can at least save part of it for college savings. We hope to get them started, and then they can have a plan for contributing every month.
And we wrapped up the race not too long ago. We're already talking about now what we're going to do for next year. Hopefully we'll continue to build on this fantastic event that we had. We had almost, I think, 60 participants this year, raised quite a bit of money. What do you see happening with this event in the future?
I think we had a great first year, and I think next year we'll have more racers. We'll get the word out sooner. We'll have more participants. We'll have more sponsors. I think it's just going to be bigger every year. And I've already spoken to several adoptive parents that have heard about this and want to know how to apply. So the word's going to spread.
Yeah, and we're showing some pictures there. For more information, you can go to our Facebook page. And I also want to say, if people want more information on what you do, Mission West Virginia and the Frameworks program, where can they go to learn more?
We have a toll-free number. It's 866-CALL-MWV, and ask for Rachel. It's a small office. I'm the person to talk to. Or visit our website at missionwv.org.
All right, and we'll announce details about the 2016 Smart 5.29K run walk later this year, but go ahead and mark your calendars for next May. And if you'd like to see more highlights and a list of winners from this year's race, you can find that link on our website at wvtreasury.com. Rachel, thank you so much for being here today. We appreciate talking with you, and I look forward to working with you on next year's event. It's going to be a great event. That's all the time we have today. Thanks so much for joining us. Remember, you can always get the latest news and information from the State Treasurer's Office. Follow us on Facebook, Twitter, also on our website. We're trying to keep you informed, and we are keeping you informed on the Library Television Network. I'm Gina Joins with the Office of West Virginia State Treasurer John Perdue.